Last week, one of my clients called me and he said, "Thank you, Anand, for literally pushing me to invest into equity markets at those levels." I'm very happy. I'm happy to see that the markets are making all-time highs almost on an everyday basis. But I'm a little concerned about new money. I know you will tell me to invest in equity, but are there any other avenues where I can invest my money in to see my portfolio grow? So last weekend, I did a small presentation to a group of investors where I spoke about alternative investing avenues that are emerging, where you can invest your new money, old money, profit book money. I've attached a recording of the presentation in this video. Please do watch till the end and do let me know what are your views on them.
Just a disclaimer, I'm a big believer in equity as a wealth creation tool. I strongly believe that India is on the growth path to become a $10 trillion economy from a $2.6 or $2.8 trillion economy that we are at today. So I believe in the next 10 years, we would be creating tons of wealth by investing in Indian equity markets itself. There are sectors like infrastructure and consumption. There are a lot of companies that are emerging in these sectors, which can act like a multi-bagger in your overall portfolio. Again, this is not about equity, just that I'm always excited about investing in equity and wealth creation via equity. And that's why I thought I would start with a note on equity. We all know that this is the greatest time for you as an investor, for me as an investment manager, and investments in general are doing great. We are all laughing our way to the bank, but then it creates two issues. The first issue in our mind is, what do I do with my profits? The second issue is, how do I invest my new set of money that is available to me right now? So these are the two questions that is always on our mind when the markets are at all-time highs. So I thought I will talk to you about emerging opportunities that are slowly developing in India. I've split this into two. The first is where you don't need to commit a large chunk. You can start with as low as 5,000 rupees, 10,000 rupees also. And the second investment avenues are those where you need larger commitments. And it makes sense only when you have a larger set of portfolio. Right? So let me start by sharing my screen. What are those three investment avenues where the investment levels can be low? Angel investing. I myself was shocked to hear it, but yes, you can start angel investing at much lower levels these days. Small case strategies. Of course, I'm sure a few of you would have already know about small case strategies. And then unlisted shares. Believe me, it has created larger wealth in the last 3-4 years than many of the blue chip companies in India. The other two investment avenues, which requires larger commitments from us, are fractional ownership of real estate and then international portfolio investing. Now you may think, what is international portfolio investing? I already have ETF, but this is true to its name, a global investing strategy. What is angel investing? As we all know, there are a lot of innovation happening in the markets, and angel investing essentially means investing in those companies that you strongly believe have the potential to either enhance or disrupt the industry in general. Of course, everybody today knows about Flipkart, Swiggy, Zomato, Byju's and Ola, Oyo and stuff like that. But this is investing in those companies maybe 5 years before anybody could actually invest. That is called angel investing. It has always been that angel investing comes with large investment. You need to commit crores and crores of money. But platforms like Tide today helps you to participate in emerging companies or new companies with an investment of as low as 5,000 rupees. So if you believe that the technology and the business model that a company is growing with, you should go and participate in that company and just commit 5,000, 10,000, 20,000 rupees as per your risk-taking capabilities. Brilliant, isn't it? Now, small case strategies, as I said, maybe few of you would already know, but the good thing in small case is that you get access to fund managers directly. I'm not saying you can talk to him or her. Here, you clearly know that this is what my portfolio is. This is my objective of the portfolio, right? It becomes very easy for you to therefore go and invest into strategy which has got clear objectives. For example, I know that we are also launching a strategy buy, hold, and exit. It's a simple portfolio which will have a two stock or a one stock portfolio, which will buy when that particular stock falls and sell once you make 15-20% kind of a return. It's a very simple strategy. So similar to that, there are hundreds and hundreds of strategy. I know of people talking about EV as a big space. What are those companies that you can invest in? You can just search for those in SMALLCASE, and you will be able to figure out differentiated strategies in SMALLCASE as a platform. Third, I'm a big fan of unlisted shares, primarily because we have seen immense amount of wealth created in the last 3-4 years. It is not that unlisted shares prices don't go up. I have primarily seen many companies prices shooting up by 2x, 3x, 4x in the last 4 years. Right? How it helps is, let's assume that you want to invest in a company like Policy Bazaar, and there are a set of investors who want to exit before the IPO itself. So you provide the liquidity to those investors who invested in that particular company early on, or are ESOP holders, employee stock option holders. So once you transfer the money to them via a broker, the broker then contacts the ESOP holder or the shareholder and then gets the shares transferred to your demat account. This will reflect in your demat account, just that there'll be no price attached to it. As simple as that. Right? So therefore, unlisted shares are as simple as the equity listed shares, just that the process is a little more cumbersome and not as easy as clicking a button. Now, why should one invest in unlisted shares? In one of the reasons why I believe India is growing towards a $10 trillion economy is because there is going to be a lot of corporatization, a lot of best practices followed, and a lot of SMEs will go on to become large caps, and large caps will go on to become blue chip. And if you want to create wealth, unlisted shares may be a good option, provided you catch hold of good unlisted companies. Our success stories have been Nazara Technologies, have been Catholic Syrian banks. These companies got listed very recently, or maybe about a couple of years back, but we have been having them for about 2-3 years before the listing itself. Paytm is one of our success stories. We have shares of MobiKwik before it got listed. Right? We have shares of Reliance Retail, which has been one of the biggest wealth creators in the last 3 years. This is much before Facebook and Google and Qualcomm came into the picture. Let me show you how it works. So Nazara Technologies, when I started buying, it was about 450-500 odd rupees, and the IPO price was 1700 rupees. Catholic Syrian Bank was at about 130-140 rupees, and today, at least on the IPO date, it was 250, close to about 250 or so. And Reliance Retail, which is still not listed, by the way, when we first initially bought 450, I bought it at 1600, I bought it at 2200, and today it is somewhere close to 3000 rupees or so. Paytm is one of them, Policy Bazaar is one of them. So there are lots of unlisted shares that are available, which, if you believe in the story of that particular company and the sector, you should participate. And again, there are no minimums. You can speak to your broker or contact us if you really need to know. The fourth part is fractional ownership of real estate. This is not very new, but this is neither very old. We used to do this for buying of residential units. So there are, let's say you have 1000 square feet home, 10 of you come together and buy 100 square feet each. But then people are no more interested in residential property because the yields are very poor. What does one do? They want to buy commercial property, they want to buy warehouses, but then there are no, the commitment amounts are so huge that they're not able to commit to that level. So that is where that gap is filled by fractional ownership of real estate. There are companies today that help you to get into commercial properties, warehouses for an investment of as low as 25 lakh rupees, where you had to commit 50 crores and above if you are a single investor, right? And the rental yields, as you know, in commercial are pretty high, much better than residential for sure. So you are an owner, you get rental income, plus you also get capital appreciation, if any. By the way, I strongly believe real estate is on its way up. The kind of money that we are all seeing in the equity markets will get poured into real estate at some point in time or the other. And therefore, this investment in real estate, both in the form of capital appreciation and regular income, is brilliant for you as a portfolio investor. And finally, international portfolio investing. Now you may say that there is nothing new in it. There is. Today, most of the funds that you're investing in are either ETFs or via mutual funds, and they generally At least most of them end up investing in the US. But are we saying that there are no better opportunities in other countries? Are we saying that there are no global companies as good as those in US? Or in other way, there are no bad companies in US? There are, right? So then why don't we look at building a clear global portfolio which invests in Asian companies, which will invest in European companies, African companies, and of course US and Mexican companies, which are best in their class. Like today, we have blue chips in India. There are also blue chips across the globe. Why don't we hire investment managers? And today that is possible. Why don't we hire fund managers who will give us access to those 10, 15, 20 great global companies and generate dollar returns? This is truly diversification of portfolio. It reduces your country risk. It definitely reduces or it helps you to reduce your currency risk. And you also get to participate in varied sectors across the globe. Is it possible for you as an investor? Definitely yes. With under LRS, you can transfer up to $250,000 every year abroad per person. And you can, why don't we use this to invest into those set of 10, 12, 15 companies that a fund manager will create for us? So just like the way there is a PMS, portfolio management service in India, similarly, there will be a fund manager who will manage this particular stock portfolio for you. He will be available to you, accessible to you to every quarter. He'll give you an update, what's happening. This is possible right now as we speak in India also. And why should we contain ourselves to what mutual fund offers us? Why don't we look at true global fund? Is that a possibility? Yes. Sitting here in India, there are good fund managers who are helping us to participate in these stories too. So therefore, international portfolio investing is of course not for all, but at some point in time, it will come handy for those who are looking at creating truly not just US, but global portfolios. So these are the 5 major avenues that one can look at participating today